All right, let's cut through the noise. For this explainer, we're digging into the major forces that are really shaping the 2026 investment outlook. We're going to skip the speculation and just look at what the raw data is telling us.
So, let's just jump right in with the single most important number of the day. And that number is $5,400.
And look, this isn't some wild guess. Goldman Sachs just put this out. It's their new target for gold. It's a really stunning forecast. And you know why? Because it perfectly sums up an economy that's being yanked in two completely opposite directions at the same time.
And you can see that tension playing out right here. 2026, it's really becoming a tale of two markets. It's like a giant tug-of-war, right? On one side, you've got this incredible promise of new tech, and on the other, just immense pressure from a world that feels like it's fracturing.
I think this image from JP Morgan just nails it. It perfectly illustrates that core conflict we're talking about. You've got the incredible power of AI literally holding up the world economy. But look at what it's holding. That economy is being weighed down by some seriously heavy risks. Inflation, massive debt, and this idea of soggy growth, which is just a nice way of saying growth that's kind of slow and just not great.
Okay, so let's really break this down. On the promise side of the ledger, you've got a real AI productivity boom, some powerful fiscal stimulus being pumped in, and global growth that's actually starting to broaden out. But then there's the pressure side, and that's where you see a global energy shock, inflation that is just stubbornly sticky, and of course, this growing geopolitical fragmentation.
All right, first up, let's talk about the engine driving all that promise: artificial intelligence.
And the data here is just undeniable. We're talking about a massive $3 trillion being pumped into AI technology. This right here, this is the investment cycle that's pushing the market forward.
But here's what's really interesting. The whole conversation has changed. We're past the initial hype, you know? The story for 2026 is all about seeing real, tangible productivity gains from AI. We're talking logistics, software, services, the whole shebang. So the big question on everyone's mind is, who's actually making money from all this?
But, and this is a big but, here's the other side of the coin. The data also shows that a full 26% of major investors are terrified that an AI crash is the single biggest threat of the year. And why is that? It's simple. If all this money being thrown at AI doesn't start showing real profits, well, that whole bubble could burst.
Okay, so now let's pivot and look at the pressure side of this equation. Because all that technological promise we talked about, it just ran headfirst into the cold, hard reality of a new global conflict.
It all happened in late February, the outbreak of conflict in Iran. It immediately triggered the one scenario that markets were absolutely dreading: a global energy supply shock. And the impact wasn't just big, it was immediate. We saw Brent crude oil just skyrocket from around $70 a barrel to over $110. And get this, that happened in just a matter of days. And let's be clear, this is about way more than just what you're paying at the pump. This conflict is sending shockwaves everywhere. It's disrupting aviation and tourism, it's got financial markets on edge, and now it's posing a very real threat to the entire global recovery. Now, as we're digging into these market-moving events, it's a good moment for a quick but important reminder. Everything in this explainer is for informational purposes only, and it should absolutely not be taken as investment advice. And of course, the views we're discussing here are always subject to change.
So, with these two massive forces, technology on one side, conflict on the other, crashing into each other, government policy has become the huge wild card. And it's having a fundamental impact, completely reshaping the value of currencies and other key assets.
Take the US, for example. The data on the new stimulus bill is pretty revealing. On one hand, yeah, it's definitely designed to inject growth. We're talking tax rebates, corporate incentives. But it comes at a pretty steep price. To pay for it, there are deep cuts to social programs, and it's projected to add a whopping $3.4 trillion to the deficit. At the very same time, you've got the Federal Reserve trying to walk this tightrope. They're navigating this super complex environment by being extremely cautious. The general consensus is that they're sticking to what they call rate normalization node. What does that mean for you? Well, it signals a very slow, very shallow path for rate cuts. We're probably looking at only 2 or 3 through all of 2026.
So what's the result of all this policy maneuvering? Well, the data is pointing in one clear direction: a weaker US dollar. In fact, if you look at the forecasts from the major investment banks, they're expecting the euro to climb up into that 1.20 to 1.25 range by the end of the year.
And that brings us right back to where we started, to that opening number.
The logic here is actually pretty straightforward. Why is gold surging? Because central banks and private investors alike are scrambling to get away from risk. They're hedging against this exact, toxic mix of inflation, conflict, and all this policy uncertainty.
Okay, so what's the big takeaway from all this data? The sources we're looking at are all saying the same thing. This new period, what they're calling the Great Reconfiguration, means you need a completely new playbook as an investor. JP Morgan's outlook actually lays out a pretty clear strategy for this. First, they say to prioritize quality, focus on companies that can actually handle this kind of uncertainty. Second, it's time to look beyond just the US market, because other places are showing some really strong competitive returns. And finally, and this is maybe the most important part, you have to understand that real diversification, using alternatives and fixed income, it's not just a good idea anymore, it's absolutely critical.
So here's the bottom line. That old world of investing, the one built on super low inflation and things just flowing seamlessly across the globe, it's over, gone. What's replaced it is a much slower, more selective environment where the single most valuable asset you can have is resilience.
And so, that leaves us with the one central question for 2026. This is the question that's going to define everything for the year ahead. In this battle between promise and pressure, can the powerful engine of AI and technology really overcome the immense weight of a fractured and unstable world?